From the floor of the CME Group, this is Danny Riley on today's Cash Close. Yeah, I get excited, especially when it's the first day of the year and the S&P is down 55 handles. How can you not be excited about that one? The name of this video, traders, the S&P 500 and China's global risk. There's a lot of it out there, isn't there? The high of the day in the S&P came in at 2001 even on the open. The low came in at 1980 quarter at 10 o'clock Central Time. That was down 55 and a quarter handles. And then the S&P, and I actually went on the MIM, and I went on the forum, and I went on Twitter, and I said I thought that the next 10 handles would be up from 1882 quarter. I bought 82 quarters, bought them a couple times, got stopped out. Said that the next 10 handles would be up. And the S&P eventually rallied up to 1995, 1996, failed, and then sold all the way back off down to 2084 around 2 o'clock Central Time. Couldn't have looked worse, right? Global markets down. Everything's terrible. First trading day of the year. Worst decline since 1932. Or something like 84 years. How could it be? The worst decline in the first trading day in 84 years. And then you know what? Then the MIM starts marching. And the MIM kept marching. The MIM started showing about 200 million to buy at about 1:45 Central Time. It kept ticking up. The S&P made its low at 2084. And then the MIM just kept going up, 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 up. And you know why it kept going up? You want to know why there was such a big buy on the close? Because you know what? Sell China. I hate to say this to my European friends. Sell Europe and buy U.S. because you know what? That's the way this trade's been working the whole time. And additionally, you know what? The reason that is that there's less risk in our markets right now. And clearly, that's where money's been moving, and we saw it on the close. The MIM started showing 200 million to buy. It gradually, that was right when the S&P was trading 2084, sold all the way off down there, and then started rallying. I was talking to the pit bull. I started showing him, and all of a sudden, MIM, 600 million to buy. MIM, 800 million to buy. MIM, 1.1 billion to buy. And then the actual MOC comes out, buy 2.5 billion to 3 billion MOC. And that's what you call putting money back to work in the first day of the month, irregardless of China and what was going on there. And to tell you the truth, I think what it is, it's a prelude to turn around Tuesday and higher prices. But that said, we already rallied quite sharply off those lows, and I don't know. Things, you know, when volatility jumps so quickly like that, as it did from Friday to Monday, or Thursday to Monday, you can't rule out more volatility like that. But that said, there's been a tendency to sell the S&P on Friday and follow it up with a weak Monday and then rally it on Tuesdays. However that works, I don't know. Got to ask the algorithms. Oh, well, don't tell them, because as soon as they know, they'll run us over with our own trading ideas. Now look, at the end of the day, the volume was good. We had 2.2 million minis traded. And that was on a day when most people weren't even trading. I suspect a lot of people didn't make it back right away from the holiday. But I think they will be tomorrow. And again, you know what? I think in the beginning of the year, I remember reading something about mutual funds being mandated to buy stock in the first days of the year, something like that. And I don't know if it's true or not. But I'll tell you what. Once that money started rolling in, you can see it on the MIM. And the S&P just skyrocketed late in the afternoon. And you know what? I was on with the bull, and I was telling him I didn't want to be short late in the afternoon like this, not with the MIM moving up like that. And then the S&P traded up all the way to 2009. We were on the instant message together. He said he thought that the S&P could get back to 2010 tomorrow, but it did in the last 45 minutes of the trade. Can you believe that? But that's how it goes, you guys, because you know what? The algorithms take the S&P from one extreme to the downside, and then they move it to the one extreme to the upside. And hocus pocus in between, everybody loses, everybody gets stopped out, and the algorithms and the computers, programs, they make. That's how the game is played. Nothing changed in that regard from 2015 to 2016, at least not yet. But we're going to leave it like that. I'm going to be doing more videos. I want more follow-up on the YouTube. You know, I don't want to be out here talking to myself, so give me some feedback, you guys. Whether I like it or not, I'll bark at you one way or the other. Have a good trading day, and we'll see you tomorrow on the opening print.